Good evening. Ira Epstein, and here we are with your weekend edition of your financial market wrap-up. And this is for Friday evening, and this is the 5th of May, 2023. You know, had you told the average person you're going to get a blowout number on jobs report today and that the stock markets would take off on that, I think that people would have gone, you're out of your mind. That's not going to be the case. You just raised rates. Quarter point. How could that be doing? The Fed is saying that they're looking for the wobble in jobs. So what happened is we had a blowout number to the upside, some revisions that I thought looked pretty healthy as well, and the marketplace took off. Why? Because what the market decided today, and I call these people the naysayers, is they're looking at it and they're saying, you know, you're all wrong. Even though you got 5.25% interest rates, the economy's so strong, why are you telling me this market's got to break? And they step in and they buy it. You may not agree with that psychology. Nothing else really explains it. I sat back today, I'm thinking about it. Why did everybody start buying? What was going on? And I have to tell you, I came into it for my clients, my subscribers, no position. So I have an open mind. As you know, I don't go through major reports. I learned so long ago that when that bullet train's coming down the road and you think you can jump fast enough, you can't. Why go in, be there to pick up the pieces after the accident happens? Today, there was nothing to pick up. The market just kept going up, and it didn't stop right into the close. Now, it's probably a combination that we don't understand about COVID. There's a lot of things that we don't understand that are still impacting society. There's a lot of things going on as to people saying, yeah, the Fed's doing all this, but the economy is so strong because labor is so strong that the market can be resilient. And that's basically what you've got. You're still having trouble getting over the 4,200 level in the S&P. As big as you were up to this week, did you end up with weekly gains or not? Something we'll see in a minute, but you got to think about. In the metal markets, they nosedove the gold on it because at first the market said, wait a minute here. When they saw that, the Fed's going to keep raising rates, it'll boost the dollar. So at first the dollar takes off and it gave it all up. And I mean all of it. It ended up in negative territory, and most currencies gained against the dollar with the exception of the Japanese yen. All right. In the bonds and notes, what did you do? You're adding yield. There's a semblance of reality hitting them, but not in the stock market. And in the energy markets for the week, I'm questioning if we're not getting to the point where the market is forging a bottom in the crude. Now, a bottom doesn't mean that it's turned into an uptrend. It's a bottom that I think is forging. When we take a look at the S&P for the week, you were down almost 1%. This is, by the way, for the month. Let me change my grammar. For the month, you're almost down 1% at 38 points lower at 4150. The weekly area chart of closes is down 0.9 as well. Why? Because it's the beginning of a new week for the month, so they're going to match each other. The market is staying over the 18-week average. So for me, the bias is up as long as you're over the 18-week average. And it has been that way week on all the way through since literally the early part of March. And it's just kept it. So on a weekly chart, have I been bearish? Absolutely not. My work is saying it's got an upside bias. Even if you get a sell signal, because the bias is up, they filter each other out. When we take a look at what the market's done, there's a battle that has formed. It began way back over here, and you can see it's still fighting itself at this general area. You've got a pattern of higher lows, higher highs. Now, the high this week was 42.06. So even if the market takes out that high, if it rolls down, what happens is if it rolls down, you've got a marketplace that, as I see it, slips back and you have no trend. So to keep the uptrend on a weekly basis, you cannot take out 40.6875. And if it's taken out, you're not in a downtrend. When you take a look at the resistance, it's crystal clear. It's been the 100-week average of closes. It was resistance here. You got back to it, and that's where you're fighting with the market. In addition to it, you've got right over it another layer, the upper Bollinger Band. Why are Bollinger Bands so important? Because 95% of the time the market will trade within them. They don't care that you are bullish or bearish. They don't care that what your reasons are and what the market's doing. They don't know that. It's a formula based on the volatility, what's going on. Read the formula. Go to investopedia.com. Got that? Type in Bollinger Bands, get a great understanding of it from there, the basics of it. Now, the way I use them is very different than most people. I tie together my version of slow stochastics. And yes, in my version of slow stochastics, they're a little different looking than yours. I now, by the way, have a suite that I make available on TradingView as well. So if you're a TradingView user and you want to use our suite, write us. We'll give you the link as to how you get that all set up. You can write me at iepstein@linnllc.com. Makes sense. If you have to repeat that, just pull back the tape. Listen, Epstein, IEPSTEIN @Linn, LINNLLC.com. All right. So as I look at the market, overbought, into resistance, trend up, bias up. We then take a look at the Dow. Well, first you have an outside week down. You wouldn't believe that after today's rally, right? You go, what? How did the market end down 1.35%? Because most people aren't paying attention. It's a down week. Now, to say that the market's going to have any legs on the down, you can't afford to take out this week's high, which was 34,363 for at least 2 weeks. If you do, the odds favor you're going to go wherever the Bollinger Band is at that point in time. If you've taken my outside day course, that will teach you how to work with that. Right now, though, what kind of market do we have? It's untradeable. You have a higher high, a lower low, the bias is up, and you're overbought. Bye-bye. I have better things to do. The NASDAQ squeaked out what? 0.2% loss. You can see that. It is embedded. It's got the strength, but it's got big resistance. The resistance is, as I see it, 13,462, which is the 100-week average up to the upper Bollinger Band. Is there a trend? There isn't. You have a lower low and a higher high. This rules the day, the momentum. If and when the red line closes under 79, I think the market will return to the 18-week average of closes. Until then, I think the market gets bought, but all that I'd be looking for is that combination of the 100-week and the Bollinger Band. In the Russell, this is the market I'm super bearish on, but you're oversold. There's not a good spot to get short right here. The market was down for the week 0.5%. The resistance area, to get to it, you got to clear the last rally high. I don't see anything there. Then we get to the 30-year bonds. And what it has done, remember, this is a weekly chart. This market in March got over that 18-week average. It hasn't fallen back. Now, if it gets under 129.4 and can close under 129.13 on the weekly basis, that would turn the trend down and open the door up for the potential maybe of getting back to a Bollinger Band. But it hasn't done that. It hasn't been able to do it. And no, it's not a sale until it closes under, the way at least I teach charting, that part of the market. And if it does, you still have to look at wherever the high is, which would be over 133, this week's high. That's way too big of a dollar risk. It's almost, for all purposes, $4,000 on a futures contract. I'll let somebody else want to trade like that. The 10-year notes is bullish. So this is the curve yield at work. It has got higher lows, higher highs. What do you think I think the objective is of the market? You've taken my Bollinger Band course, and at the end of this, we'll put on one of my ads for the Bollinger Bands. They're so important. Right here, when you hit a Bollinger Band and you're not embedded, there's a rule. I'm not telling it to you. Take the course and learn it. It's so important. In the dollar index, the trend is down. Market's oversold, which I don't like, but I can make an argument, a big one. You know, 3 weeks ago now, I did my video report showing why I think the dollar is going to fail this year. And this chart is certainly in line with it. I'm looking for support between 104, the one, let's call it 141, 42, the 100-week average of closes down to 123, the lower Bollinger Band. That would be the support area. Embed the way you did back here, which you haven't even begun doing, and I get even more bearish. When we look at the euro currency, if I'm bearish the dollar, I'm bullish the euro. Higher lows, higher highs. Do you think I would ever tell one of my clients to buy a Bollinger Band? Take my course. Canadian dollar. Okay. It's doing something important. I can get rid of this down arrow and actually move it to a blue arrow here and say higher lows. Looks to me like higher highs. The market's starting to get bullish. I think that the pros will defend the 74.11 area. And if you get under 73.23, which again is too much risk for the way that I teach charting without it being what we call an embedded trade. With that, I would then, unfortunately can't take it, but the risk factor is too big. On the Japanese yen, I am bearish. I think we've had the rally. I think the market is looking at all this, and I think the pros are looking to find a way to get bearish on this market. Bitcoin has the embedded reading, so I'm friendly this market. If you get my morning subscriber video, and by the way, when I say that, you know, there's a blue button if you're watching me on YouTube, and it says join. Click it. It tells you how you can join my morning subscriber videos. It's important because that's where I lay out all the trades. I am restrained here. I'm like, Atlas, I can't say anything. The government says I cannot tell you to buy and I cannot tell you to sell. I cannot say do this and do that. I am restrained by it. It's the way it is set up. This is a general forum. It is not a members only, and I pay attention to the rules. I am Atlas Unchained in my morning subscriber videos, both the ETF and the Spider. And if you've taken them, I think you know I've got a personality. I'm aggressive in the markets when I think it's time to be so, and I lay out the reasons why and how to do it. You won't get that here. This is the freebie. In Brent versus WTI, all right, we had gotten down to a low differential on a weekly basis. We're getting a bounce. And now I'm thinking the market's gone far enough. Why? If you look back here, and this was in March, again, you tested on a weekly basis right through here, the 200-week average in the Bollinger Band. You did it again and you held. Are we trending? We are not. Not in the sense of a bear trend being lower highs, lower lows, plural on both. Here you have a higher high and lower low. So what the market's doing is one of these waves moving people in and out. WTI, same thing. So if you were sitting next to me and you broke this week down there into the Bollinger Band, what do you think my elbow in your rib would have done? It would have broke it. You'd be saying, Ira, this is where it's falling apart. I'm going to cover all your shorts. In Rebob, now the market is coming down to the support here. All right, so what we had, and the last break low, by the way, was 237.95. We took that out, so I can get rid of this. You actually have a higher high and a lower low. Would I tell a client to sell into a lower Bollinger Band? No, but why? That is the key. The answer is why. And I explain it all in my simple video course. You will learn in the course of 2 days, 3 days, my technique on this. You will see it show up on ETFs and stocks and futures on a regular basis. Every week you're going to see it do it in some markets, a lot of markets. And that's, to me, the beauty of this. Now, how do you learn? Simple. Take a look at this and join me. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.